Countries will wage war over this, and no, it's not oil, but rare earth elements are the commodity of the next century. And here's the kicker: we can get in before it explodes. Think mining Bitcoin when it was still punchline, or buying Texas land before the oil rush. The demand is real, the stakes are high, and the opportunity is ours for the taking. So stick around, because sleeping on this could be like saying no to Bitcoin, what was being handed out for free, okay? Remember those days when free Bitcoin was, all you had to do is solve a CAPTCHA somewhere, you got 5 Bitcoin? Those were crazy times, man. Yeah, let's not miss the rare earth train here, okay, guys? So, look, what the hell are rare earths anyway? We're all familiar with the usual metals: gold, silver, copper, right? But rare earth minerals, there are 17 of them in total. They are the hidden backbone of modern technology. And they're not actually that rare, to be fair, in the Earth's crust, but mining and refining them is relatively expensive and complicated and highly concentrated in just a few countries. So it introduces a certain element of rarity. These are metals you might not even have heard of, like neodymium, dysprosium, scandium. The hell's scandium? They have unique properties that make them essential to the technology shaping our future. Super strong magnets, heat-resistant alloys, luminescent materials, and advanced electronics. Without rare earths, electric vehicles don't happen. Wind turbines don't happen. AI hardware doesn't happen. Advanced defense systems, aerospace technology, none of this shit exists without the right metals. The global rare earth market is currently valued at just $5.7 billion and is projected to reach nearly $8 billion by 2030, with a compound annual growth rate of around 6.3%, which might sound relatively modest, and it is, but I think it's seriously underestimated. Here's why. According to the American Society of Mechanical Engineers, the average electric vehicle uses about 0.5 kilogram of rare earth materials. Just one. And almost every modern industry depends on these in some way. The AI revolution is not just about code and algorithms. You have entire warehouses, data centers full of hardware which all contain these rare earth minerals. Robotics, humanoid robots, sales humanoid robots, guess what? They're all being smashed full of rare earth minerals. The military relies on them for guided munitions, radar, stealth aircraft. When you combine the explosive growth of AI data centers, EV, humanoid robotics, drones, defense spending, that 6% growth rate could prove laughably conservative and probably hasn't factored in everything that's going on beneath the surface here. In reality, demand could accelerate far faster as every major industry scrambles for a finite supply of the elements powering the next industrial era. By the way, if you want to stay up to date on everything going on in the equity markets, rare earths, metals, stocks, crypto, Bitcoin, trading updates, and much more, check out our free newsletter, link down below. Okay, so look, here's the problem. At least for the USA, China is way ahead in the rare earth game. It dominates not just mining, but more importantly, the processing of rare earth elements. Between 2020 and 2023, roughly 70% of all rare earth compounds and metals imported into the United States came from China. That's a massive dependency problem and exactly the kind of leverage that Beijing holds in this new era of geopolitical chess. Even the recent deal with Argentina, of the USA buying $40 billion worth of Argentine money, part of it is a deal to get access to rare earths in Argentina. They've made a deal with Australia to get rare earths. China right now, though, holds the world's largest known rare earth reserves and controls most of the refining infrastructure. But that's changing, okay? The serious vulnerability, the USA knows it, and the White House is acting on it. They're not sitting still. U.S. Treasury Secretary Scott Bessent recently said the country is working at warp speed to close the gap within the next 1 to 2 years. The plan: build a domestic and allied supply chain that reduces reliance on China and strengthens U.S. strategic dependence. Honestly, that's bullish, man. And not just for America's security, okay? But for us investors who want to make a ka-ching out of the market, okay? Because look around the corner and see where this is heading. As the United States races to rebuild its rare earth supply chain, billions in subsidies, contracts, and private investments are about to pour into companies that can mine, refine, or recycle these critical materials. Washington has made supply chain independence a top national security priority. And that means American and U.S. allied producers in Australia, Argentina, and other places are set for massive tailwinds. For investors, this is the moment to position early before that capital wave fully hits. Of course, we cannot predict which company exactly is going to pump That's not how it works. I don't have a crystal ball. But we can look at some publicly traded ones as a start to get an idea of what the market looks like and what are some of the major players right now in this particular space. Now, one standout here, of course, is MP Materials with ticker MP. And to be clear, this is not like a go out and ape into list. Investing in anything has a lot of risk. You can lose all your money. We're just talking about some of the big players in the market so you can have a better understanding educationally of what's happening in the market. They operate the Mountain Pass mine in California, the only major rare earth mine in the United States. For years, MP shipped its concentrate to China for processing, but that's changing fast. The company is now building its own refining and separation facilities on U.S. soil, aiming to create a fully integrated domestic supply chain for rare earths. Here's where it gets even more interesting. MP isn't just another mining company, okay? It's backed by one of the most powerful institutions on the planet, the Pentagon. The United States Department of Defense became one of MP's largest shareholders after agreeing to purchase $400 million worth of preferred stock to accelerate its refining operations. In other words, this isn't just a speculative play, it's a national security asset. When the world's strongest military is literally putting hundreds of millions of dollars of skin in the game, probably don't want to bet against it. Next up is Lynas Rare Earths. Ticker is LYC, is traded on the Australian Securities Exchange, or the ASX. Lynas is one of the very few companies outside of China with a fully integrated mining to processing operation. In fact, it's the only major producer of separated rare earth materials anywhere outside of China. Australia, of course, is a major producer of minerals. This makes it strategically vital to the West and to the United States. The company's importance has not gone unnoticed. The U.S. Department of Defense is co-funding Lynas's new processing facility in Texas as part of a broader effort to rebuild a secure supply chain independent of China and with close U.S. allies like Australia becoming a major part of the mix. Okay, it's a clear alliance play. U.S. friendly, geopolitically aligned, and already a proven global producer. So if trade tensions continue to escalate, Lynas is positioned to pick up the slack here for the U.S. and to strengthen the entire Western supply chain for rare earth minerals. Then there's Energy Fuels with the ticker UUUU. This has been a very popular one recently. Traditionally known as a uranium producer, Energy Fuels has quietly evolved into a serious player in the rare earth space. The company is using its existing infrastructure to process monazite sands, a byproduct of other mining, and extract valuable rare earth minerals out from them. Looking ahead, Energy Fuels is planning a major expansion that would essentially allow them to process around 10,000 tons of mixed rare earth concentrate every single year, a capacity that rivals leading non-Chinese producers like Lynas. That's a big deal for a company operating entirely on U.S. soil with strategic U.S. interests in mind. And for investors who prefer a more diversified, hands-off approach, there is, of course, the VanEck Rare Earth and Strategic Metals ETF with the ticker REMX. This fund holds a global mix of mining and processing companies offering exposure not just to the USA and to Australian producers, but also to emerging players in Canada, Europe, and Japan. Is an easy way to capture the broader rare earth theme without having to try to pick an individual winner within any one economy. ETFs like this could be worth considering if you'd rather have a professionally managed fund out there doing the research for you and rebalancing for you. But an ETF like this makes it very easy to position yourself into a strategically important sector for decades to come. Here's the deal. Technology will always evolve. That's what it does. One thing never changes. Progress depends on raw materials, metals, energy, that kind of stuff. So securing the supply chain isn't just about economics. It's about ensuring that innovation itself doesn't stall. Rare earths have long been the Achilles heel of U.S. technological dominance, and Donald Trump is trying to change that. Right now, Washington is making it clear that weakness will not be tolerated. The White House has pledged billions to strengthen domestic production and reduce reliance on China. When the government opens a checkbook, investors who move early usually reap the rewards. Now, I don't have deep rare earths exposure in my portfolio right now, but I'm dabbling and putting a little bit more money into a few things. In fact, I think I'm going to buy some of that Australian one, Lynas. I've got a bit of USA rare earth company as well. I think it's a sector that definitely deserves a few percentage points of attention in my portfolio anyway. Thanks for watching.